Hello and welcome to the Weekly Forex Outlook at xm.com. The second round of the French election will take place on Sunday, with Euro traders eagerly awaiting the outcome. In addition, next week in the US, Fed Chair Powell will testify before the Senate Banking Committee. And over in New Zealand, Kiwi traders will be keeping an eye on upcoming Chinese data and the RBNZ decision. I'm Maria Pachardez, and joining me is Senior Investment Analyst Harlamos Bisuros. So Harlamos, let's begin in Europe, where traders are anxiously anticipating the results of the second round of the French election, which will take place on Sunday. Last Sunday, the far-right National Rally Party led the first round. How likely is it that they will secure an absolute majority in the second round? And what would this mean for the French government and the euro?
Hello, Maria. Yes, indeed, Le Pen's National Rally led the first round last Sunday, but left-wing and centrist parties formed an alliance and decided to withdraw their candidates in electorates where there is a three-way runoff. That's because they try to increase their chances of stopping Le Pen's party from running the government. Now, the outcome of the European parliamentary elections revealed that the rise of Eurosceptic parties is a negative development for the euro. Thus, the coordinated attempt to stop Le Pen's march was seen as a positive. Now, however, even if the left-wing alliance secures victory and the euro opens with a positive gap on Monday, uncertainty will not vanish as investors may still be eager to find out whether this could lead to a stable government. What's more, there is also the chance of having a hung parliament where a minority government will struggle to pass legislation. This could lead to a prolonged political paralysis given that no elections can take place for at least 12 months.
So moving to the US now, Fed Chair Powell will testify before the Senate Banking Committee on Tuesday, and on Thursday we'll get CPI data. What are we likely to see there, and how might it impact the Fed's rate path and the dollar?
Now, this week at the ECB Forum on Central Banking in Sintra, Powell said that they are getting back on the disinflationary path, which supported the market narrative that 2 quarter-point rate reductions may be warranted this year. Now, although Powell is unlikely to deviate much from what he said in Portugal, the Q&A session may include more targeted questions that result more clarity regarding the Fed's future course of action. Nevertheless, even if Powell insists that there is no urgency to press the rate cut button, whether the market pricing will drastically change could depend more on the outcome of the US CPI data on Thursday. So, if we get a further slowdown in inflation, this may convince more market participants to bet on 2 rate cuts by December, and thereby the US dollar may come under more selling pressure.
Turning to New Zealand now, the RBNZ will meet during the Asian session on Wednesday. Are any changes on interest rates expected? And what else will Kiwi traders be keeping an eye on?
No, there are no changes expected, but investors will pay attention to the bank's language and stance. Back in May, officials discussed the possibility of raising interest rates, and since then data were largely better than expected, corroborating that hawkish view. Yet, investors are expecting slightly more than 40 basis points worth of rate cuts by the end of the year. But with the RBNZ having little reason to shift to a less hawkish stance, a reiteration of the May message may prompt market participants to scale back their rate cut bets, which could prove positive for the Kiwi. And Kiwi traders will also pay attention to the Chinese CPI and PPI data, due out just half an hour ahead of the RBNZ decision.
And finally, now that the general election in the UK is over and the Labour Party has secured a majority in Parliament, what should pound traders be on the lookout for?
Okay, next week, pound traders may pay attention to the monthly GDP rate for May, which comes alongside the industrial and manufacturing production numbers for the same month. Now, with the Labour Party securing a majority in Parliament, the Bank of England may speed up its easing process on expectations of a more fiscally responsible government. This could prove negative in the future, in the medium term, for the British pound. So, improving GDP during the month of May is unlikely to severely alter market expectations with regards to the Bank of England's policy plans.
Harlemus, thanks so much. This was the Weekly Forex Outlook here at XM.com.